Welcome to the Bullish Money YouTube channel. We have got a show for you today, and I am going to stay on point this time because we're only going to cover one topic, and that's the Dow Jones and the media portrayal of the Dow and the financial markets in general. So let's get straight to the headlines. According to the Associated Press, U.S. stocks end sharply higher after afternoon surge. U.S. stocks log best day in almost 4 years, rebounding from 6-day slump. It's not a rebound. Now people say it's a rebound, because the markets were strong today and went up 4% or something. So what? I mean, the Dow lost more than 1,800 points over a 6-day period, and on the 7th, they get all crazy because there was a 600-point surge. Who cares? You're still down more than 1,200 points. I mean, we still lost more than $1 trillion in market capitalization. And, if you call that a rebound, I mean, this is how the media is just very, very generous. We should just call the media Santa Claus. That's what they are. They're just giving stuff away. When things are not looking so good, the media will find any way, the mainstream media that is, any way to make it look in the best light possible. And then when, other things that are not necessarily conducive to their interests, such as, gold prices, going down or getting hammered. I mean, they love to, play that up. Oh, yeah, the gold's getting crushed. It's getting massacred. And they use this almost the point they just love to use the most extreme language possible when the precious metal sector comes crashing down. But they're very, very generous, very kind. They put on the white gloves for the stock market, and I think you really have to play. You have to play it fair here. I mean, you can't apply one standard to one asset class and then not apply that very same standard to every other asset class. And I don't necessarily mind when people use strong language to describe the precious metal sell-offs, the multitude that we have suffered over the past several years. I don't mind it. I don't care. I mean, that's someone's opinion and that's someone's word choice. I mean, I can't really complain about that. But then what I do complain about is that when something like the stock market, like something like the Dow Jones and the other major indices, when that's getting crushed and there is a very high probability that it'll continue to get crushed, then I have a problem with you using white glove language, Santa Clausing your way through social media and through other media outlets, claiming that everything is cool. We're rebounding. No, you're not. You're not rebounding anywhere. I mean, what it is a dead cat bounce. That's all it is. This whole idea of the Dow moving up 4%. I mean, honestly, I think that's just buy orders that were long forgotten that were just triggered by these institutional funds. Like, oh yeah, didn't you say you wanted to buy Apple at $105 or something? Well, here's your chance, and then boom, the orders get triggered, and then so we get this surge of momentum. But it's all just technical, algorithmic, logic based movements. It's all Skynet computerized shit. I mean, this is not really doesn't give you a true sense of the valuation out there. This is just orders being inputted into the system. And, people probably just left it out there saying, I want Apple on my wish list. I want Google on my wish list. If it gets down to this price, automatically, buy some shares for me and I'll be happy. And that's fine if I'm going to use a technical analysis argument, if the trend was still bullish, if the trend channel was still inclining upwards then yeah, then these little dips are buying opportunities. The problem is when the trend channel is veritably crushed. And that's exactly what we see in the Dow and the S&P 500 and the NASDAQ. The harsh sell-off, the velocity, the extreme velocity in what we have seen over the past week or so, that has completely disrupted the bullish trend channel. So when I see moves like this, yes, I call it a dead cat bounce, but in reality, it's panic buying. This is you've heard of panic selling. Well, this is the opposite. This is panic buying. This is just people either not remembering that they had these orders, these open orders in the system, or it's just people not knowing what they're doing and buying on the dips just because they see a bunch of red tape, because they've been taught never to buy high and never to sell low. So they're applying contrarian investing tactics or trading tactics. But you can't really play games like that when you're talking about the major indices, because this is a reflection of the major blue chip companies out there. And so when there's when you see this rapid loss of valuation in the blue chips, equities that are typically not that volatile, when you see such extreme volatility in usually stable assets, that's a major problem. That's a major problem that you can't afford to ignore. Yet this is exactly what the mainstream is telling you to do. And I'm not just, making this stuff up. I mean, here we have this Yahoo Finance article. Here's how smart investors will react to this week's market drama. Well, the only reaction really is to get the hell out. And just like that movie, They Live, it's almost as if more and more people have got those magic sunglasses and they're seeing the reality of what's going on. Now, I would say that the majority of America is completely brain dead. And as I've said before, I don't think that, once you reached a certain point of being so brain damaged, there's really no hope in trying to save them. And only thing you can do at that point is to save yourself and hope that they don't sink the ship that you're on. It's so funny that the mainstream has this opposite paradigm from which they are operating. So here, let's scroll down to this paragraph. As we all should know by now, however, it's a bad idea to follow your gut instincts when it comes to market-fueled panic. Well, I don't know. I don't know if it's such a bad idea. I mean, I trust my instincts. You know what? Who are you to tell me that my instincts are wrong or bad or whatever? I mean, you don't know me, so you can't dictate that to me. Anyways, continuing on. Now isn't the time to sell investments and start padding your mattress with dollar bills, experts say. For the average 401k investor, the answer to what you should do in reaction to today's downturn is simple. Just hang in there. I love that term. Just hang in there. Yeah, just like people hung in there in the 2008 crisis, right? And in the 2000 internet bubble collapsing, they just hung in there. When Yahoo was selling at, $5 million per share, whatever, I mean, not that it literally sold for that price, but it was a pretty crazy time period. And the people that just hung in there, I mean, they're not getting their money back. And a lot of people that were hanging in there in 2008, they panicked like anybody would expect them to. And so they couldn't take advantage of the rebound because it really was truly an unprecedented event. And just a few short years later, you're giving the same bullshit advice of just hanging in there. How is that an action item? How is that an answer? Just hang in there. It's just to do nothing. I think that in these moments when there is such extreme volatility, you have to do something. Whether it's pulling out your money from volatile equities and moving it over into safer funds, or buying gold, or buying guns, or hoarding food, or whatever. I don't know what, I'm not recommending any specific course of action, but when you have so much stuff, when you've literally just vanished $1 trillion of market capitalization, you have to do something. Because it's funny that everybody else clearly is doing something. Everybody else is doing something. I mean, where did the sell-off occur? I mean, the sell-off occurred by the Wall Street elites. They are the ones that caused this shit. Right? I mean, isn't it funny that, when we get these rapid destruction of wealth in the stock market, the mainstream always comes after you and me, the little guys, the regular folks who are not, the Rothschild elitists or the Rockefellers. We don't have Rockefeller in our surname. We're just regular folks who are just trying to make a living for ourselves and for our families. It's funny that when things get really, really bad, the mainstream comes after you. Why? Why should you get this patronizing advice when it's the elitists that cause this problem? I mean, it wasn't you that crashed the stock market, right? I mean, does anybody here have billions of shares of blue chip companies that you can just sell right now and crash the market? Nobody has that kind of leverage. Nobody has that kind of leverage. Not a single person has that kind of leverage unless you are part of the corporations, the elitist organizations out there that control, vast portions of American wealth. Only those entities have that kind of leverage. So you're telling me not to panic, not to sell. Why don't you tell the elitists out there not to panic, not to sell? I mean, even in these comments I've gotten on my YouTube channel, I mean, some people are saying, hey, you shouldn't cause other people to panic. I'm not the one causing people to panic. I'm not the one doing it. It's those assholes on Wall Street. The $1 trillion hedge funds out there, the major institutions, whether they have a public face or not. Those are the guys that have catalyzed this enormous evaporation of your wealth, by the way, your wealth, your retirement, your future, your dreams. They blew that up. And yet the mainstream media has the nerve to tell you not to panic. Because if you panic, you little person, if you panic, you'll cause everybody else to panic. I mean, this is just such a perversion. It's such a perversion of reality. And if you're not convinced by now that the mainstream is essentially demonic, and if demonic is too much of a conspiratorial word, or if it's too much of a spiritually tinged word, completely batshit insane. How's that? I mean, there's really no other way to describe it. I mean, it's like they raped the American public, and then they expect you to clean up the mess afterwards. I mean, this is disgusting. And yet, time and time and time and time again, these mainstream pundits come out there urging the American public not to panic. Don't panic. We just lost $1 trillion of valuation. Don't panic. Don't panic. It's nothing to worry about. In the meantime, they're calling up their buddies and say, hey, let's get out of this position right now. Let's get out. There will be no stopping this panic. Right now, I think that the government, that Wall Street, they are depending upon the general ignorance of the Americans, the general. Really, the word is retardation. Retardation in its purest form as just slow to cognitively put different events together. And they're relying on that general retardation so that they could dump the bag to somebody else. Dump their problems onto somebody else so that they could run away and fly off to wherever, and leaving the rest of the majority of Americans just holding this bag of worthless crap. And that's really what it is. It's a battle of information. It is. As Alex Jones says often on his show, it is an information war. And he who has, or she who has the most information, the better information, is usually going to be the winner in this case. Information is power. And in this case, you just have to, again, like I said in the previous video, you just have to stack up all the evidence. Stack up all the evidence and see with your own eyes where you think this market and this economy is heading. And I've already given several times my opinion. My opinion. I don't like this situation one bit. And I urge all of you to, again, do your research, but do it quickly. This is going to be, as I showed you with those inside day charts, what happened in 2008, literally life could change in just a split second. Your life can change just boom. It's just awful how quickly things can change. And once it does, it could be intractable. You may not, you can't, reset yourself. And so I'm telling you, for your future self, do something today. Take care of yourself today. And, look at what you need to look at, listen to who you need to listen to. But at the end of the day, you got to take some action. You have to take some corrective, defensive action in order to protect yourself. Not only protect yourself right now, but think about where you will be 5 years from now, 10 years from now. And think about where you will not be 5 years from now, 10 years from now, if you do not take defensive action. Again, I said it before, it's better to take a 5% opportunity cost right now than it is to lose, 50% of your retirement savings. It's just very, very easy math. Now, another topic I wanted to talk about will be for another video, and this is one that has come up quite often, is what's going on with the price of gold. Specifically, gold should be moving higher in times of economic turmoil, and yet it's getting crushed, generally speaking. Now, I understand that people will point to the manipulation argument, and I'm not going to be able to add anything new there because there are clearly experts that can speak more eloquently on that particular subject. But I did some research into this, some very unique research, and I think you guys are going to be very interested. I believe I found out the reason why gold is getting crushed when, quote unquote, it shouldn't be getting crushed. I think I'm on to the answer here, and it has nothing to do with manipulation. It can add to the manipulation argument, although I did not, don't think that I took this in support or not in support of the manipulation argument. I just took it from a completely different angle, a more empirical and a quantitative angle. And so I'm going to do a separate video on that. I think it deserves a separate video. I want to make it a little bit more well produced so that the pertinent points are addressed. And so I hope that this video will help to clarify some of the misconceptions out there regarding the economy and regarding gold specifically. So anyways, look forward to that. And thank you again for all the support. It's been very humbling, and we'll see you next time.